Introduction to Forex Trading, your ultimate guide to the currency market. Ever wondered how global events impact your wallet? Imagine making profits by trading currencies from around the world. Welcome to the world of Forex Trading, where the potential for financial success is at your fingertips. Ready to explore this exciting market and transform your financial future? Let's dive in. Today, we're diving into the dynamic world of Forex Trading. Whether you're a complete beginner or looking to sharpen your skills, this video will provide you with a solid foundation to navigate the Forex market confidently. Note, this video is for educational purposes only, and trading is a risky but wealthy profession, so do it at your own risk. Section 1. What is Forex Trading? Forex, or foreign exchange, trading is the act of buying and selling currencies on the global market. It is the largest and most liquid financial market in the world, with trillions of dollars traded every day. Traders aim to profit from fluctuations in currency exchange rates. Example: if you believe the euro will strengthen against the US dollar, you can buy euros, EUR, and sell US dollars, USD. If the EUR-USD exchange rate rises, you can sell the euros for a profit. Section 2. How Forex Trading works. Forex trading involves currency pairs, where one currency is exchanged for another. The first currency in the pair is the base currency, and the second is the quote currency. Example: in the EUR-USD pair, EUR is the base currency and USD is the quote currency. If the EUR-USD is quoted at 120, it means 1 euro is equal to 120 US dollars. Key concepts. 1. Bid and ask price. The bid price is what buyers are willing to pay for a currency, while the ask price is what sellers are asking for. 2. Or spread. The difference between the bid and ask price, representing the broker's profit. 3. Leverage. Allows traders to control larger positions with a smaller amount of money. For example, 50-to-1 leverage means you can control $50,000 with just $1,000. Section 3. Major currency pairs. The most commonly traded currency pairs include: 1. Your USD, Euro, US dollar. The most traded pair in the world. A USD JPY, US dollar, Japanese yen, known for its liquidity. 3. GBP USD, British pound, US dollar, also known as cable. 4. USD CHF, US dollar, Swiss franc, known as the Swissy. 5. AUD USD, Australian dollar, US dollar, influenced by commodity prices. Example: if you think the US economy will outperform the Eurozone, you might short your USD, betting that the euro will weaken against the dollar. Section 4. Key terms in Forex trading. 1. Or pip, the smallest price move in a currency pair. For most pairs, a pip is 1001. Example: if EUR-USD moves from 1:1200 to 1:1205, it has moved 5 pips. 2. Lot, the standard unit size of a Forex transaction. A standard lot is 100,000 units of the base currency. Example: buying one lot of EUR-USD at 1.1200 means buying 100,000 euros. 3. Margin, the amount of money required to open a leveraged position. Example: with 50-to-1 leverage, opening a $50,000 position requires a $1,000 margin.